Fear crashes the market. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I have my afternoon stein of coffee and I've been watching the market very closely today, as I am sure all of you have. Now before we have a look at a few articles, let's jump to one of my favorite websites, and this is from Trading Economics. If you're familiar with the channel, I'm sure you're familiar with this website. And what I have here is the S&P ASX 200 index, and it pretty much took a 6% hit in early trading this morning. Look at that hit, guys. Gold also shot up to new highs, particularly in the Australian dollar and the US dollar, and is, what, 16.59 right now. So it's lost a whole lot of that gain. I think a lot of people are taking profit. Silver's not doing too well. And if we jump, let's go to the Forex, the Australian US dollar. It is also heading back down to 64 cents territory. We'll just jump back to the ASX 200 because a 400-point hit, that's pretty big because it's now under 6,000, guys. That's a psychological barrier. And we'll jump out to the 10 years data. Oh, we'll go to all data. Okay, have a look what we have here. Look at that dive. Look at this one, guys. See how it dove, like crashed, and then it shot back up again. Almost like a housing market that's rebounding. That's the dead cat bounce, bounces and then it falls right back down again. So we'll have to wait and see what happens in our market if there is a turnaround. But I think a lot of that is to do with fear, and a lot of that is to do with just concerns. But see, money pouring out of this could go to safe havens, and one of those traditionally in Australia has been property. So it'll be interesting to see what happens. Although, there's a property across the road that went to auction, passed in, which wasn't advertised or advised anywhere, and has been sitting there for sale non-stop because they're not budging from the price they bought it for. So, sometimes you got to cop it, guys. So let's have a look at this article. But, are any of you, before we jump into this, I've had some viewers share with me that they're shorting travel companies, they're shorting the banks, they're buying gold or silver. What are you doing to prepare for this? Are you buying pallet loads of toilet paper and selling it on the side of the road to respond to people? Or are you buying nightsticks to sell to people in the future toilet pallet wars? Let us know what you're doing in the comments, everyone. It'll be interesting to hear. So, the Australian share market falls to fresh horrific depths as illness fears escalate. And I'm avoiding saying certain terms because with YouTube's, auto subtitles, it instantly demonetizes videos. Even though you'll get manual review a couple of days later and they'll say it's fine. So you would think there would have to be some advertisers that wouldn't care. But that's just the way it is. So let's have a look at this article written by James Hall. The Aussie market has been lashed by more horrific losses as crude oil prices plunge and the escalation of the illness stifles international economic growth. Well, actually, yeah, that's what I forgot to mention. We'll jump here and we'll go to commodities. Look at crude and Brent. Crude down 30%, Brent down 27%. Guys, $29 a barrel. Wow. Wonder if we'll see that in the bows. I doubt it, but maybe. The S&P ASX 200 initially dropped 435.8 points or 6.8%, but has since recovered. I don't think it has. Or maybe a tiny fraction has. By 11:13 Australian Eastern Standard Time, it was 5.3% lower, shedding 110 billion and compounding the nearly 3% fall on Friday. IG market analyst Kyle Roeder says a plunging oil market coupled with an increasingly crippled economic supply channel due to travel restrictions and trading restrictions has amounted to a massive sell-off. I'm seeing a market in panic at the moment. I don't think you can phrase it as anything else, he told news.com.au. More than 440 billion has now been lost from the local market since it hit an all-time high of 7,289.7 points on February 20. Now, a huge crash A huge bursting of a bubble is always preceded by an all-time high, isn't it? The more I'm learning and watching the markets and looking at the trading that people do, is people always tend to take a profit when it hits an all-time high, doesn't it? And then, you see it plunge or sharply, and then fear sets in. And I'm starting to realize a big part of it, particularly if you're going to trade, is overcoming the fear and controlling your emotions. So maybe that's to be stoicism for trading. There we go. That could be a good book. Italy was thrown into chaos over the weekend after Prime Minister Giuseppe Conte announced a sweeping quarantine, closing off a quarter of the country's population, including Milan. Bloody hell. But the real pain appears reserved for Wall Street, where its futures index plunged more than 4% on spiraling oil prices, stoking fears of a US market crash. This was based on Saudi Arabia slashing its oil export prices, invoking the possibility of a destructive price war with Russia. It's going to be another volatile start to the week, Mr. Rhoda said. The big concern ultimately for financial markets right now is you see a slowdown in global economic growth, but also you raise the risk really quite considerably of some kind of credit crunch because of the stress a lower oil price will have on some very vulnerable companies in the United States. The risk of financial contagion is probably the highest it's been for a decade. Well, here's a question for you. Will a plunging oil price affect the financial viability of certain businesses in the States and in Canada, particularly those that are fracking, that are moving the oil from less commercially viable locations with incredibly low prices? Will that be an issue? Could that potentially cause issues for the US's energy independence? Let me know if you know more about that in the comments, guys. It's something to consider. Wouldn't it be nice being a country that's energy independent? That'd be a nice thing, wouldn't it? So, his analysis of the supply and demand of IG's clients suggests the market would fall nearly 2% once trading opened, but the losses were far worse. That would take us to quite remarkable lows we haven't seen since February last year, he said. Pepperstone, head of research, Chris Weston, expects US crude oil to be absolutely taken to the cleaners based on the news out of the Middle East, which will further stifle investor confidence. I don't think it's going to be a particularly pretty picture, Mr. Weston told news.com.au. I can't see it, the open of trading, being anything but another horrific one, and while energy is a smaller part of our market, the implications are far-reaching. The Aussie dollar was buying 66.10 US cents, up from 65.96, and I'm looking at it right now over on this screen, and we're at 65.1 at the time of recording. So we're below the market close on Friday now, and it did touch 64 cents. The largest falls were felt in the energy sector, with Woodside Petroleum down 16.91%, Santos lost 24.4%, $5 to $5.06. Origin was down, Oil Search 26% weaker, and Beach Energy slipped 22.1%. The next worst sector was materials, with Rio Tinto down, BHP down, and Fortescue Metals down. All four major banks were more than 4% lower, with Westpac shedding 5.11% to 21.9%. We're definitely in interesting times, everyone. We definitely are. The ASX rose 280 points over 2 sessions after the Reserve Bank of Australia Governor Philip Lowe cut interest rates to a historic low of 0.5% on Thursday. And an amateur observer would be forgiven for dismissing the radical slumps as just another rise and fall. But CMC Chief Market Strategist Michael McCarthy said these erratic movements are significant and concerning. Now, I heard that some CMC, was it, is put a trading halt today. That's what some people are telling me, guys, in the comments. Let me know if that's happened. I'm just looking it up now to see if there's anything going on. Trading halt. It's not coming up. It tells you that we don't know what's going on, and that's the big issue for the market at the moment, he told News.com. It's the uncertainty of the economic impact of the illness. We get optimistic about potential central bank support and fiscal stimulus from governments. Then we see another school close or another border shut, and the sell-off comes. Well, yes, this is looking like it is the bubble that is being burst, or the pin that is bursting the bubble, guys. We'll bring up here, look at all the stocks. Down, 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 down. Everything down. 4.6, 5.16. Nasdaq 100, 5.39. FTSE 100, 3.2 down, 3.62 down. DAX 3.37 down. CAC 40, 4.34 down. There you go. Australia, the ASX 200, 6.55 down. We're the worst of all of them, guys. You know, there you go. We'll show them how it's done. We'll show them how to do a proper crash. Oh boy. That uncertainty means the volatility is likely to continue, and unfortunately, the longer it lasts, the more economic damage is done, and the more likely we'll see lower levels on the Australian share market. Oil prices plunge. A dispute between oil producers has resulted in oil prices plunging and could lead to a global economy already spooked by the illness being awash in an oversupply of crude. Brent crude, the international standard, was more than 20% lower this morning at US 35.77 a barrel, and I'm looking over right now, it's 32.46 right now, so it's even worse than this. Recovering slightly from a low not seen since 2016, when it fell to 32.64. Yep, we're below that now. We are below that. As I'm recording that, we're below that. Prices are falling as Saudi Arabia, Russia, and other oil-producing countries argue over how much to cut production in order to prop up prices. Yeah, it's those damn oil cartels, guys. You know? So, I wonder, will this be a benefit to consumers, everyone? Will it be? Or will what's going to happen to companies that are no longer viable at these low prices? Demand for energy is falling as people cut back on travel around the world. The worry is that the new illness will slow the economies sharply, meaning even less demand. So there we have it, everyone. Certainly been an interesting day today in the markets. You know, I'm keeping an eye on what's going on. You know, let's have a look at gold. I mean, gold is... It's meant to be a safe haven, but it looks like a whole lot of people are taking profits. But I mean, you know, if you came down from here and up to here, I can't blame people for taking profits. Look at how it's going. So it's down to 1662, but you know, it's steadily climbing from April last year to now. What was it, March? Well, there you go, March, 1273. It's been a good year if you got in March, guys. So how are you planning? What are you preparing? What are you doing? Let us know in the comments, guys. I hope you haven't borrowed in margin to invest in a whole lot of shares that have tanked, because that's it's going to be tough for some people out there. Thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel here on YouTube or on Patreon for a small monthly donation. You can also support us using our affiliate links at Amazon or eBay, where we receive an advertiser's commission that doesn't cost you a cent. We have links for Independent Reserve and Kucoin for the crypto traders out there. If you use those exchanges to make a trade from our link, we receive a small commission that doesn't cost you anything. We also have pocket squares that we sell from the HeiseSays website, and PayPal if you want to support us that way. Thanks to everyone who's helping the channel. Really appreciate it. Have a great day, and keep an eye on the market. Bye for now.